Tony, we just got the MAS decision and also GDP numbers, less hawkish than expected from the MAS. But here's what worried me. Downside risks have intensified for 2023. Does that change the narrative in terms of how we position in the Singapore market?
Yeah, I think you're right. I think it was somewhat of a relief to see fairly decent numbers for the third quarter. It's a bit of a relief to not have, extreme hawkishness by a central bank somewhere in the world. But I don't think it necessarily changes the narrative at all. I think what the world is focused on is 2023 outlook and the risk of recession really around the world. And actually in most countries right now, one of the surprising things, our markets are doing so bad, but the broad economy in most countries are actually fairly stable and resilient. And so we have this dichotomy of how do we deal with numbers that really aren't so bad right now, but we really think they will get worse in 2023.
So, Tony, for us over here in Asia-Pac, the bear market is somewhat long in the tooth, isn't it? So, arguably, we've done a lot of work in terms of pricing in the recessionary environment. So, does that imply that we can start looking selectively at buying some of these markets?
Yeah, so we would agree with your point that we actually think the markets have already priced in a recession, and a fairly significant one at that. And it's at odds with the fact that if we look at sort of broad growth in both in terms of GDP, or actually even right now, consensus earnings for 2022 are still up, even though markets are down 25%. And so I think to your question, well, if we're having this dichotomy where it looks like the markets have more than priced in a recession already, and we're not even really getting it. We're not really sure how deep it will be. But I would say our answer is, our formula for buying is we look for signs of the trough of the recession. We look for PMIs to bottom and various other indicators. And the trouble is, the PMIs really haven't even turned negative yet, let alone really sort of troughed. And therefore, I think one of the sort of depressing things about investing in this market now is just that we don't really seem like we're at a point where things will level off at a bottom yet. And mostly, I guess, our calls, we're just sort of stuck in range-bound markets for the next quarter to 2 quarters. And we think it's too soon to buy. We still have underweights on global equities, even though we think it's probably oversold at this point.